well. But what's really done well over the last couple of weeks have been the defense stocks. Data Patterns and Zen Technologies are in focus after reporting their fourth quarter numbers. Ria joins in to tell us more about that, but more importantly, the outlook for these companies. Ria.
Well, yes, both Data Patterns and Zen Technologies have both been in focus once again today after reporting a very healthy set of numbers on Saturday. For Data Patterns, the revenue has gone up by around 117% on a year-on-year basis. EBITDA and net profit have both jumped up by around 61% over the previous year. Margins, however, have contracted to about 38% in this quarter versus 51% that we saw in Q4 of last year. For FY25, they've surpassed their revenue growth guidance of 20 to 25%, and they've also surpassed their EBITDA margin guidance of 30 to 35%. The order book, however, that has been weak for the company, coming in at just about 730 crores in this year versus 1,083 crores that we saw at the end of FY24. The order inflow guidance has also been missed. They had a guidance of rupees 700 to 800 crores for FY25, but the order inflows have only been about rupees 355 crores in this year. Going ahead, they do expect a revenue growth rate of 20 to 25% and EBITDA margins to be in the range of 35 to 40% for FY26. And today, the company said to us in an interaction that the order intake, although that has been weak in FY25, but that is expected to pick up going ahead. And they also expect an order book of rupees 1,000 crores in FY26. The stock was trading higher, up about 8% in early trade, but has pared some gains post that. Moving on to Zen Technologies, this stock has been in an upper circuit of 5% for the 7th consecutive session today. Revenue has gone up by around 130%. EBITDA is also up by 174% over the previous year. Margins have also expanded to 42.5% versus 35.6% that we saw in Q4 of last year. The total order book for the company is healthy at rupees 691 odd crores. For FY25, they surpassed their guidance on all fronts for revenue, EBITDA margins and PAT margins as well. Going forward, they do expect to execute an order from the Ministry of Defense for integrated air defense combat simulators for the L-70 gun in FY26 itself. And today, the company also told us that operating cash flows are expected to turn positive in FY26. They're also expecting a revenue growth CAGR of 50% over FY26 to 28, and they're expecting cumulative revenues of rupees 6,000 crores over the next 3 years. So overall, very positive updates for both of these stocks trading higher in today's session.
Thanks a lot for that, Ria.